this computer. Okay, great. Well, good morning, everybody. Welcome to the final sub-industry spotlight of the 2025-2026 season, which is really exciting. And I'm very happy to be talking to Tina Ramos today of MVP, Matterhorn Venture Partners. We did talk to Scott McKibben, I think last year, and talking about his decision and how his wife helped him with the MVP acronym, which is always nice.
Yeah.
And so, yeah, I'm excited to be talking today about all things deal making and, investing and your career path. So, Tina, why don't you start off with just a high level introduction of yourself and we'll go from there.
Yeah, thanks so much, Kelsey. And thanks everybody for joining. I'm so excited to be here with you guys. This is so fun. I love it. So yes, my name is Tina Ramos. I am from Chicago originally. I grew up on the south side of the city. I am the first person in my family to go to college, first gen college, which is something that I'm very proud of. I went to Yale for undergrad. I graduated in 2007. After college, I moved to New York. I was working at a hedge fund in New York that was investing in low carbon energy infrastructure
Hmm.
and kind of low carbon energy projects. So I was on the kind of clean energy side, on the finance side, and the GFC was happening kind of as this was all while I was working in New York. And I got really interested in the policy side of clean energy because at the time there was tons of money going into the Recovery Act or from the Recovery Act going into renewable energy. And so policy was kind of standing up this renewable energy sort of as an industry. So I got really interested in the policy side, and I moved to DC. I was the person who ran
Tina, you're breaking up a little bit.
the think tank, so very kind of politically oriented. I was managed office relationships with the White House, and can you guys hear me?
You're freezing a little bit. It's like I can hear
Did I
you,
just
but
pause? Or can you hear
y
me?
your video is frozen now. Can you hear me?
Hear me?
Hello? Tina, can you hear me?
Can you hear me?
I can hear you, but you're frozen. Can you hear me?
Kelsey, can you
Um,
hear me?
oh, I see you're moving now. Can you hear me? Oh no.
Full internet. Can you hear me? I'm so sorry about this. I have full internet. I'm downstairs, like right by the router. So I don't know why. Can you
Oh,
hear me now?
I can hear you now. Can you hear me?
Yes. I'm so
Okay.
sorry, guys. Yeah. I don't know what the problem is. Yeah, my bad.
Yeah. It's okay.
I
We're
I moved I moved downstairs in my house where I typically have much better internet than upstairs. So hopefully that was just a little fluke.
yeah,
So I'm
well,
sorry about that, guys.
it's okay.
Um,
We heard,
yeah.
why don't you start with, let's see, I have your LinkedIn up too.
DC.
Yeah, going to being a chief investment officer, making that leap.
Oh
Uh,
yeah, for sure. Yeah, yeah, definitely. Yeah. So super fast forward, I went to business school, got into real estate, and I was working at a private equity firm that was investing in real estate. I left that firm after being there for almost 10 years in 2022. And then I wanted to kind of focus on industrial, so I joined an industrial developer operator platform based here in Chicago. Um, and was chief investment officer. So essentially helping him put together a capital strategy around acquisitions and helping him raise money for development. And then my friend in the industry, Scott, I think who some of you know, called me in 2024. It was April of 24 and said he was leaving the company that he had started about 15 years prior and wanted to start Matterhorn and asked me to be his business partner. And it was an opportunity that I couldn't refuse. So here I am as an entrepreneur, which has been a lot of fun. So yeah.
yeah, that's amazing. I mean, wh what an impressive career. Plus, also what an impressive like schools because I we ran over it, but the Yale undergrad to UCLA Business School, must be a huge part of setting you up on this path. But so impressive. Um, One question I do ask everyone before we get too far is that before you wanted to do big deals in industrial real estate, what did you want to be when you grew up?
My when I was a kid, my dream my dream was to be a United States senator. which I still technically can, guys. So if I run, you'll have to vote for me. But I don't know. Politics are so crazy right now that I don't know. I don't know if I could do it. But that was my dream as a kid.
Amazing. Yeah, I would vote
Yeah.
for you. We would all vote for you.
Yeah. Thanks.
Yeah. Um, and so what you're doing at Matterhorn now, what does your job look like in basic terms? I know there's a mix of people on the call right now, people who are probably much more familiar with investing and people who maybe aren't so much, but if you could tell us what does your job look like as principal and co-founder of this amazing company?
Yeah. Um, my business partners and I, we buy industrial real estate. So we recently secured a big private equity firm in New York to give us a essentially 300 million of equity. So we have $1 billion of buying power now in the Midwest, which is really exciting. It took a long time, honestly, to get them kind of teed up. But I would say through the small team, it's myself, my two business partners, and we have an analyst. So, we're all very busy wearing a lot of different hats. I would say where I focus my time is in finding deals, finding assets to buy. So, calling on brokers, calling on owners, finding opportunities that fit our investment profile. So I spend a lot of my time doing that. I spend a lot of time liaising with our capital partner. Just I came from the institutional capital side, so I just speak that language very well and kind of understand what their process is. So I sort of manage a lot of that relationship with our partner. I spend time with lenders, trying to find banks or insurance companies or debt funds that will make us loans on the assets that we buy. And I also spend, time just kind of, just networking with different folks in the market, different vendors, attorneys we need to use for our deals. So I always say that my job is kind of putting all the pieces together. As I find
Mhm.
the deal, negotiate with the seller, negotiate with our JV partner, negotiate with our lender, kind of putting all the pieces together for a deal is what I do.
Amazing. And I would guess, and Goldie Scholars can correct me if I'm wrong, that that is what a lot of Goldie Scholars want to be doing. They want to be in the middle, touching a lot of the vendors, contractors, and being the key decision maker. So I'm so happy you're here. And as a reminder to everyone on the call, I'm going to turn over the questions to you all. So be sure to be thinking about your questions because I'm sure they're going to be awesome for Tina.
Yeah.
Let me make sure everyone's muted. Okay. Um, so my goodness, I have so many questions now. Um, I guess I'll start with I mean, you mentioned it briefly in that description of what you do, but I'm so intrigued by like how you build that relationship to,
Mm-hmm.
get to $1 billion in buying power. I mean, what an incredible accomplishment. But that, like you said, is a long time coming and a lot of relationship building. And as maybe a new uh organization, like, can you just talk to us about maybe how much it's been like a lifetime of relationship building to get to this point, or how much it's like a year-long process? I'm not sure.
Yeah, no, it's a great question, and I think one of the coolest things about about real estate, our industry, is that it is so relationship driven. And I mean, I know a lot of industries are. It's certainly not unique to real estate, but I joke with my husband, because obviously there's everything going on with AI and all these jobs are being replaced, and it's this dystopian sort of outlook for a lot of kind of white collar jobs. But I always tell my husband, I'm like, I'm never getting replaced by AI. Like, there's so much of our industry and deal making and getting things done is just being in front of people. So I've been doing it. Really, I started doing it when I was, chief of staff to I mentioned briefly before I got cut out to the think tank, where I just had to get really good at managing people and managing relationships. And so that started even before I was in real estate. But it's certainly continued on. But I would say, you know, especially again in real estate, there relatively are so few women. And so when I was younger, I'm 41 now, not that I'm old, but when I was younger, in my, 20s in real estate, I would feel this pressure, I think, to, fit in with the guys and, kind of assimilate and do things that in a way that was comfortable, for the people that I was working with. And I've realized over the years, as I've, gotten more seasoned in this industry, I know more, I, speak the language as well as anyone else, that I've developed my own style of just
Mm,
negotiating, of, networking, managing relationships, and I do it kind of in a way that's authentic to myself. Versus when I was younger, I was trying to say things that I thought people wanted to hear, or do things in a way that made them feel comfortable, maybe at the expense of myself.
mm,
So it's been a process, certainly, but and it's a process for everybody, and everything in this industry takes time. Like to your point, Kelsey, on the Angelo Gordon, our capital partner. I've known the deal guy who kind of covers the Midwest for probably 10 years, and we've been friendly and gotten things done over the years. But signing them up, it took almost 2 years to do it.
wow.
So it's just a reminder that, like, you plant the seed on a relationship, and maybe something doesn't materialize that minute, maybe not in the next week, maybe not in the next month, but maybe 2 years later it does. So I always treat every opportunity, every person I meet, as someone that I want to get to know, and someone, as a relationship that I want to foster. And who knows where it ends up going, because there's opportunity that maybe comes in the future and not in the present. So you just never know. It's kind of fun.
Yeah, and real estate's such a small world that like there's so
It
many
is.
connections that happen.
It
Um,
is.
and now you're connected to all these lovely women on the call, so they can
Yes,
reach out to you in a few years and be like, "Hey, I was on that call with Kelsey, and can you?"
absolutely.
Yeah.
No, yeah, definitely want you guys to. I mean, it's so funny. I was having lunch with this guy yesterday, and you guys I'm sure have seen it all too, and you will continue to see it. But he's talking about how he's self-made. It's all him. And I'm like, dude, really? You had parents who paid for your college. You've had so many privileged opportunities in your life. You've had so many people help you,
Hmm.
that it's not just you. And I know that about myself. Like, I've had fantastic mentors, people who have connected me when I've asked them to, hold outreach I've done to people, and they've helped me. So I just, no one does it on their own. And anyone who says that they did it on their own is delusional, because you can't do it on your own. So all that to say, I encourage you to, if I can ever be helpful to anybody on the phone, please reach out to me. Please reach out to other people. Nobody gets where they are by themselves. This is not possible. So
Yeah.
yeah.
Well, I guess on that note, Kira, you've raised your hand. Do you want to ask a question?
Yeah. Hi, Tina. Thanks for sharing. I feel like one thing that has really resonated with me so far, based on what you spoke about, is, finding your voice and being comfortable showing up as you are in the workplace and not necessarily trying to assimilate in a way that, will make the other person feel more comfortable, while
Mm-hmm.
kind of putting yourself to the wayside. However,
Mm-hmm.
I do have a question, and it is more so like an investment question. And I'm
Yeah.
wondering, when you're approaching, whether it's institutional investors, family offices, or high net worth individuals who aren't already familiar with your
Mm.
asset class, I know you said you focus on industrial.
Yep.
What have you found to be like the most effective way to educate them and build conviction? And
Mm.
then how do you balance maybe explaining some of the fundamentals of the asset type, while also demonstrating that it's a really attractive investment opportunity? And I say that because I work in affordable housing finance, and though
Mm-hmm.
that's not the same as industrial, I think there's a lot of opportunity to get more people invested in the space, but
Mm-hmm.
I think it's such a niche field that people don't really they shy away from investing in affordable housing because it's a little complex and it's just something
Mm-hmm.
new.
Hmm.
Yeah. It's a great question. I actually just recently had this happen, actually. So I'm on a I'm on a board, and got to know one of the guys on the board ultra high net worth individual, has his own family office, and we have a deal that we were raising money for from high net worth folks. So I reached out to him because he expressed an interest in investing in industrial. That he and his family office, they've done a bunch of multifamily, but they've never done industrial. So they're like, I sent him the deal, and so basically how I do it, um, I always and I've done this a couple of other times with other, sort of high net worth investors as well. But I always come from the angle, and I'm sure you've done this too, Kira, but of the angle of just educating. So basically, I was like, here's our deal. Let's get on a Zoom, and I'm going to explain to you just how industrial real estate works, which markets are interesting, how industrial compares to multifamily, because I knew they had that point of reference. So I'm like, here, and I did multi at the private equity firm that I worked for, so I can also speak the language of multi. So I was like, here's multi, we get it. Here's how here's how industrial compares to multifamily, and literally like did a PowerPoint for them and kind of ran them through how industrial compares to multifamily, because the way that I invest is I always need context. Like, you look at a deal or you look at an opportunity in a silo on its own, and you're like, okay, yeah, like flipping through, that looks interesting. Wow, those yields are interesting, but how does that compare to everything else? Mm-hmm. And so I know that real estate, especially today, just given interest rates blew out and there's lots of other kind of higher yielding opportunities now versus, 5 or 6 years ago when rates were zero and, real estate was a little bit more, I don't know, yieldier. But now there's lots of different stuff competing with real estate. So understanding sort of the comparison of the two asset classes, but then also comparing where real estate, kind of how that compares to other kind of higher yielding opportunities is also something that I typically do. So just staying informed of, kind of what else is happening in the world. There's lots of money being raised around AI right now. So that's obviously like very yieldy and competes with real estate in a lot of ways. So just being able to speak to kind of the bigger picture and how what we're raising money for fits in and why we think it's compelling is kind of what I always do. And again, it's the more I can get in front of people, like the phone, just like this, is my least favorite type of communication. I mean, I do it if I like have to, but intro call, people want to just make sure you're not a crazy person. But if you have an opportunity to get in front of someone, because people, I know this for a fact, people invest with people they like and they trust. And the only way to build that trust is really to be face to face. So, and whenever you can get that opportunity, I highly encourage it too, because it's so massive. But that's a great question. I get that all the time. Yeah.
Thank you so much.
Did that answer it, or is there
No, that
anything
was
else
perfect.
Okay,
Yeah,
yeah.
that was great. Thank you.
Yeah,
Yeah,
I love that answer. Like education within context, because you could talk
yeah,
about affordable or industrial till the cows come home, but like how does it compare? And that's how we all, when we learn things, it's so helpful.
yeah.
Um, you mentioned that part of your job is finding, I wrote finding deals and assets to buy. Is this like, traveling to locations? Like, could you just explain to people like that part of your job, what goes into, your ideal asset at this point in 2026? What are you looking for that stands out, that really excites you, or maybe stuff that you would avoid?
Yeah, no, definitely. So, so we buy industrial buildings. The money that we have with our capital partner, the mandate is to buy value add industrial buildings in Chicago and in the bigger Midwest.
Mm.
So we have like a very clear mandate. My two business partners came from an industrial operator. I came from the capital side. So basically, I have to go out and find value add industrial buildings to buy because that's what our mandate is. Stepping back one layer, there was tons of money raised for real estate, obviously last cycle, but even into kind of 2022 or 2021, 22, before rates like really started going like this, tons of money raised for real estate. And it's been a really challenging environment the last couple of years because of how quickly and how much interest rates went up. So institutional investors like the private equity firm that's our capital partner, everybody is focused on deploying the money that they raised in 21 and 22. And so I would say there's lots of demand for multifamily. There's weirdly like a lot of distress in multi that not a lot of people are talking about, and industrial and more kind of specialty products like self-storage, student housing, that kind of stuff. So there's lots of capital on the sidelines kind of chasing the same deals. So that makes my job a little bit harder because there's a lot of people that want to buy industrial buildings. So what I do is I compete on, so I would say in real estate, money is a commodity. Like everybody has the same money. If you have like what if you have the same profile of money. So the capital that we have is a value add return profile. So we have to solve for kind of mid to high teens lettered IRRs to the deal. Some folks have, core plus money. So they are solving for, kind of lower to mid teens returns. So they can pay more for an asset because they don't have to make as much return. But everybody with the same profile of money, the money is all the same. So how I compete is on speed and doing what I say I'm going to do. And you would think that this is common sense, just like being quick, being accurate, being a fast responder. I am shocked every day by how mediocre so many people are, to be honest with you. Like, so I compete so well against those people. So basically, I'm in front of all the brokers, talking to owners directly when I can as well. And so I'm top of mind for them. And when they call me on a deal, like I had a guy call me on a deal, like not even an hour ago on a deal in DuPage County in Glendale Heights. I'm going to underwrite that deal today and I'm going to send an offer on it today. Cause he's like, oh, if you can send it to me next week. I'm like, Mark, I got you. I'm sending it to you today.
Wow.
So what I do is I'm quick and I'm as accurate as humanly possible. And I say what I'm going to do, or I do what I say I'm going to do. So a lot of my time is just spent basically just kind of managing those relationships with brokers and trying to find deals that way. And so, yeah, I mean, that's kind of what it is. And so once we offer on a deal, make an LOI, an offer to buy it, there's typically negotiating between, myself via a broker usually. Sometimes we'll do it direct, but there's usually a broker. Negotiating price, timing, all the different pieces that kind of go into a deal. And then once you get the deal and LOI signed, it starts the next phase of negotiating, which is the purchase and sale agreement. And so there's lawyers involved, but we're negotiating via our lawyers. But the way that I negotiate, so it's funny, I'm generalizing, but there's a lot of men in this industry that just like they want to win, like they want to like get the last penny, or they want to get the absolute best terms on every single thing. And it'll drag out negotiating. It'll leave a bad taste in the other party's mouth. It's just, if you grind just for the sake of grinding or winning, it leaves everybody feeling a little bit icky on the back end. And so I always prioritize what is important for us for this deal. And like, I always go at negotiations generally with a reasonable kind of outlook where we're going to meet in the middle anyway. Like you always meet in the middle. Like very rarely is a negotiation very one-sided. Sometimes it is, like sometimes you just don't have leverage and it is what it is. But typically you meet in the middle. So I just always come at it from a reasonable, we're going to get this done. I'm not going to grind you down. I'm not grinding down for the last penny because it doesn't matter. We just want to get that last penny doesn't make or break your returns typically. So I'd rather just have everybody feel good at the end, including myself, honestly, and just save myself some brain cells and some like emotional, damage by just being reasonable. So that's typically, kind of how I get deals done too. So, again, doing what I say I'm going to do, being quick on the front end, getting deals tied up. And then when the actual negotiating comes, I just position myself from the beginning as reasonable.
That's awesome. Yeah.
Yeah, and it worked. I mean, sometimes people are terrible and it doesn't matter, if you're reasonable or not, they just want to grind you and it's ridiculous. But,
yeah. No, I love that. You're like, the last pay doesn't matter, but it does matter for the relationship long term too. If when they
Yeah,
think about you 5 years from now about another deal, they're like, oh, well, Tina like grinded me
yeah,
down to the last penny. I don't really want to work with her again. But, or if I
totally.
left feeling good, there's
Yeah,
dividends there.
totally. Yeah.
I have a question from Tiffany Kim.
Hey,
Let's,
Tina, thanks so much for hosting. So
Of
you've
course.
done about $7 billion plus in transactions. Is there a particular deal that taught you the most? And are there specifically projects that maybe you would forego and like not do?
hmm,
Wow, great question. Gosh, I worked on so many cool deals. I would say um, probably my favorite deal and one that I was proud of myself. Just I had a lot of conviction around it and was able to kind of turn my investment committees, turn them around and change their mind on it. So this was in 20, let's see, this was in 2020. So it was right, it was like the second half of 2020. COVID was crazy. Just real estate, everything was just like completely up in the air. Like just nobody really knew how to underwrite the COVID risk at that point. But I was at the private equity firm that I used to work for. So we would make LP equity investments with different operators or developers. And we also would make loans to the same types of guys that we would partner with. So a group that I knew really well. We hadn't transacted with them yet, but I've been courting them and talking to them for a long time. They called, or actually, so they had hired a broker to find them a loan on this asset in Chandler, Arizona, and Phoenix. It was just being finished. They were just about to get CO. So the broker had called me, so I called the guy because I knew him. It's like, hey, I really want to make this loan on your multi project in Chandler. And he's like, oh my gosh, Tina, our capital partner just dropped us. We don't have our LP just walked away because it was so like COVID was so nuts. Everybody was going crazy at this time, probably like June, maybe 2020. And he's like, would you guys underwrite it for the equity? Would you guys buy it with us? And I was like, yeah, of course. Like, let's do this. So at the time, it was just being delivered. So it was not leased. I think it was like 10% pre-lease, like nothing. And so I had to go to an investment committee, make case around this deal. And just investment committee said it was too expensive. At the time, I don't know if any of you guys are familiar with multi, but at the time it was basically like a six cap on trended, assuming you get the rents that you thought you were going to get. And in 2021, a six was like super wide of market, but my investment committee still just wasn't, interested in buying multi in Phoenix at the time. So I literally called every single person on the investment committee and just basically like begged and pleaded for them to do this deal. We ended up doing the deal. We bought it for like 250,000 a unit. And we ended up closing in November of 2020. We bought it November in 2020, like 250 a unit. We sold it in December of 2021, 1 year later, for 450,000 a unit. We made 200,000 a unit because we just bought at the right time. It was a wide market cap rate. Interest rates were still zero. We sold it for like a four cap. It was insane. It was like one of the best deals in the fund. So it was just all that to say, when you feel something in your gut, like you cannot take no for an answer when you know you're right about something. So that was a really cool one, just because I just had conviction around it and it ended up working out really well, which is super cool. I would say, opportunity now, it's kind of hard. I mean, there's not as much deal flow right now because I don't know, there's a lot of debt capital in the market. So anybody that owns, if it's cash flowing or if it's behind pro forma, kind of in either situation, there's debt money to refinance you and to kick the can down the road a little bit. So finding good deals is actually a lot more challenging right now, certainly than it was, pre-interest rates going up, but you have to work a little bit for it. So I don't know. I mean, I do like industrial. If I could do anything right now, I had a billionaire just funding any deal that I wanted, I would develop
Mm.
industrial because there's been frankly nothing developed over the last 5 years. I mean, relatively speaking, in most markets. So in Chicago, for example, there was a lot. in 2022, there was tons of big box that was available that had been developed and not leased. All big box is leased right now. There's a little bit of a pipeline, but it's still tough to capitalize development, I would say. So definitely would develop industrial. I have high conviction over just infill multifamily, just in stuff that's just like in city centers, job centers where there's tons of people around. If there's high barriers to entry, I still like that type of multi. And then this is super contrarian, but I actually really like office as well. There's office is very binary. There are winners and losers in office right now, 1,000%. But transit oriented, well located, Class A building that you could probably buy for like an 8 cap right now. And I mean, in Chicago, for example, like there are some office buildings that I would absolutely buy just because of the yields. They're just so wide right now because office is so out of favor. So I think office is interesting. There's not a lot of capital that wants office. So I think the guys that are buying office right now have private money behind them, high net worth, family office, coupon clipping type of private money. That's typically what's buying office. But I think there's really interesting opportunity in that space too.
Got it. And then a quick follow-up. Do you think that deals are found or made?
Mm.
Like good deals?
Wow. It's kind of a cop out, but I think both. Because I find deals all the time that are good deals, and then it gets messed up. The seller wants too much, or we're asking or wanting to pay too little, whatever. So it really is both. Like you have to find them, and you're okay, I'm gonna lasso that one up, but then like getting it from lassoed to like over the finish line, the deal making is just important, honestly. Yeah.
Okay, thank you.
Okay.
Yeah, of
Thank
course.
you, Tiffany.
Great
Great
questions.
Yeah.
Yeah.
Let me remove spotlight. Oh my gosh. Do not remove from room. Okay. We do have another hand raised from Neva. Oh, I lost you, Neva. Where are you? Okay.
Hey,
Yes.
hi Tina.
Hey, Neva.
I we talked like probably like 3, 4 years back when I
I
was a
know.
student and
Yeah, I was gonna say, I remember you. Yeah, it's so nice to see
and
you again. That's so awesome.
yeah, I love that you really give me the time of the day. I know you were probably very busy and so I appreciate that.
Of
And
course.
now I've positioned myself to work in asset management and I was like I'm gonna start my career in asset management because it's like jack of all and master of none. You're doing anything from like acquisition, helping it out, underwriting, finding
Yep.
tenants, placing debt or refinancing all the way to disposing. So that's
Yep.
the way I saw it. But now I'm like at a point where I'm 2 years in, I'm thinking in order to be a more over how do you say well-rounded individual in this space, you have to
Hmm.
understand so many things and it's so much like on some days like
It
I'm
is.
like extremely overwhelmed because some days I go into a meeting and I don't know anything about the debt market or refinancing because I've not been through this, right?
Yep.
So
Yep.
this question comes from like a little bit of a curiosity standpoint, like if you were to position yourself again in the career path you were in, like, or if somebody's looking to be eventually be more entrepreneurial in their journey and just to best position yourself so that when the time comes you're kind of ready, what
Yeah.
are the kind of advices you would give? I heard a little bit of like networking not as a means but also like just for relationship building purposes, but are there like certain career paths you would choose or XYZ tasks you would recommend for like somebody who's like a little early in their career? What's a good
Yeah.
next step, I guess?
Yeah. Well, no. Well, Neva, thanks for your question. Yeah, I'm so happy that you're in asset management. It's so awesome to hear that too. I would honestly like it's interesting. So last cycle, so many people made money in real estate as a function of just like interest rates keeping going down to zero. And so last cycle, you didn't have a lot of people, I mean, lots of people made lots of money and executed really well, and kudos to them, but you didn't actually have to be good at operating real estate last cycle in order to make money. And this cycle is the opposite. This cycle, no one is getting bailed out by interest rates going to zero. You have to be good at operating real estate. I cannot stress that enough. Like, I'm seeing it all the time. People just being like, wait, like, we don't just get to sell this for a four cap? Like, what are you like, what are you talking about? All that to say, I think being in asset management has never been more important than it is right now, to be honest with you. Um, I think asset management is going to change a lot over the next 5, 10 years because of AI. And I think to the good. Like, I think that asset managers will be able to be more accurate, more productive, really the glue that kind of holds the business plan together, enhanced by AI. So, like, I don't want you to think, oh, I just started in asset management. Asset management is such an incredible foundation, especially today. If you like it, if you are good at it, there is going to be so much opportunity for you the next 10 years. I cannot say enough because there are just so many people that don't know what the F they're doing, being totally honest with you. So it's being able to operate a building and understanding how that works, the components to it, different just decision making around maintenance or, replacing equipment, whatever it is, signing leases, doing an analysis around, does this lease make sense? Should we charge another dollar in rent? How should I think about this? That is so massively valuable no matter what you end up doing in your life. Because the thing is, Neva, like, if you end up staying in your job, staying in asset management in 10 years, 5 years, whenever it is, if you want to decide to do something on your own, you have the skill to go be able to manage any building that you buy. So it could be you have friends and family and you go buy a 3 unit apartment building somewhere in the city or wherever you guys live or whatever it is, and you understand how real estate works and operates, and you can buy that building. It doesn't even I encourage people too. Sometimes people think of entrepreneurship as binary. I actually used to think that too, where it's like you're either an entrepreneur or you're not. But I know lots of people that have a day job, do really well at it. They buy apartments on the side, or they buy small industrial buildings on the side, or strip centers, or whatever it is. So there's always a way to do both if you want to. But I just to underscore, I think you're in a great spot, and the function that you're in is only going to become more important over time. So I hope that answered it. But is
That
anything else?
does. Yes,
Yeah.
absolutely. The thing that I feel like is lacking in sometimes in the career path I'm in is underwriting
Mm,
deals and being
Yeah.
really good at it. Like for
Yeah.
us, we're involved in acquisition, but it's more like tenant interviews, overseeing
Right.
the underwriting once it's been complete to give like some sort of feedback. That's where
Right.
I'm like, I feel like there's a gap a little bit there. So that's why I was thinking maybe a little bit down the road once I know like all the
Yeah.
way, like, the whole life cycle of a deal until disposition, maybe acquisition. But I'm like, I'm very confused, and it's okay
Yeah.
to be confused, but just I like to think a little bit ahead in that terms.
Yeah.
And also, I mean, I know money isn't everything, but compensation is very important to me. Like asset
Yeah.
management seems to be a job with a cap versus
mm.
acquisition seems to be a little more lucrative, and there's like a lot of ways you can make money on the side and things like that. So there's so many things like I'm like thinking about like what's a good next step for somebody starting early on to really be a sponge and have maximum knowledge and like
Mhm.
move
Yeah.
in all thinking of all these
Yeah.
directions.
Yeah, for sure. What do you guys buy? What product types do you buy? Your company.
Everything,
Okay.
everything,
Oh, that's awesome.
everything.
That's
But
even
I
better.
I mainly work in retail and medical office buildings.
Medical office. Okay,
Yeah.
yeah. Yeah, I mean, certainly like making a pivot from asset management to acquisitions is something that you could definitely do at some point. No problem. I would say like, I don't know if you have, there's folks on your team on the acquisition side, even a little bit more senior, just somebody, I mean, even if you just like, hey, can I see that pro forma? Can I, and if you kind of study the pro forma and you have some questions about it, I would imagine like I used to learn from my colleagues all the time. Like I was on the acquisition side. I would go to our asset management folks and be like, how do you guys do this? Like, how do you think about it? And everybody would always help me. And the same with me. Like they'd be like, why did you choose that rent instead of that rent? Or like, why is it this cap rate versus that cap rate? Or, why would you get this loan versus that loan? And I would always take the time too, because like that's what happens. So if there's folks internally that, maybe you take the initiative and you're like, hey, let me look at that pro forma, let me study it. Can you help me with this a little bit? At least having like the baseline knowledge of kind of how a pro forma works, different components of underwriting, you could learn that as where you are. And then, if you do decide to take the next step and want to pivot to acquisitions, it's always possible. But I would just encourage you to just use the people and the resources that you have, because you'd be surprised. You just have to ask,
Yeah.
but
There's
people will
lots
help.
of Goldie scholars too, of course, need to be
Yeah, totally. Yeah.
and
Maybe
mentors
one.
and people. So um,
Mhm.
I am gonna, sorry, I'm gonna move on to the next question, Neva.
Oh,
I
yeah. Yeah. Yeah.
uh, just because I want to
Me
keep it
too.
on
Yeah.
Yeah. Keep it
uh,
going. Yep.
Thank you so much.
on deal
Yep.
making. Um, but I mean, it does bring up one question that is part of the journey too that I think many Goldie scholars are interested in, which is like entrepreneurship. And I loved the like that it's a non-binary thing. It's not like either I've made it as an entrepreneur or I failed and I'm doing a corporate 9 to 5 and that's it. It's like in
Yeah.
real estate, there's ways to, make deals. But for you, it's you've worked at, I think, large companies and now you made the jump to being partner at Matterhorn. What is why did you decide to make that jump? That's pretty risky. I think a lot of scholars are risk averse, but they're also interested in, doing the job you're doing where you're in the middle and you're getting to make all the big decisions, which you can do probably at a smaller company quicker.
Mhm.
So just
Yeah.
give a little bit of storytelling to the scholars about what made you make that decision and what that's been like to be at a smaller group.
Yeah. I would say honestly, I'm pretty risk averse. So the fact that I did this is like, I even to this day, I'm like, oh my God, I can't believe I did this, to be honest. But yeah, I mean, as I mentioned at the beginning, I was first generation college. I'm very close with my parents. I don't have any financial safety net from them. It's not like I've always, just been very focused on earning a salary and making money because I got bills to pay. This isn't charity. Work is not charity. We're all in it to make money. You know what I mean? So but I'd always kind of noodled on doing something more entrepreneurial. And my friend, now business partner Scott, he came to me. He's a little bit older than I am. I don't know if any of you guys, I think maybe some of you have met him or talked to him, but he's in his late 50s. He's started a couple companies before. He's always been a friend and mentor. And when he asked me to be his business partner, I was like, I believe in Scott.
Mm.
And, I thought, if I don't take this opportunity that's literally been handed to me, I don't think I'm ever going to do it. And so I took the leap, and really with the backstop of like, if this somehow fails, I don't think it will, but if it does, I'm highly employable. Like I can get a job, I mean, so I do have that backstop. And so I didn't know if I would ever have an opportunity like this again. And so I seized it, honestly. And I'm not gonna lie, there have been some really hard days where like I'm on the floor crying, freaking out that I'm never gonna make any money. I haven't made any money in 2 years, guys. I freak out. Like there's some dark moments, But hopefully there's lots of money coming at some point. But yeah, I've learned a lot about myself, and being an entrepreneur is very volatile. It's an emotional roller coaster. And I think it's made me a stronger person, just being able to kind of, weather that volatility. But I'm so happy I did it. I've learned so much about myself, about the industry, and it's been really cool, but very hard. It's not all easy, not all glamorous at all. But it's been awesome,
Yeah.
So yeah.
It reminds me of one of the very first Shiro was Shelley Rosenberg, and when we did the gala video for her, she talked
Yeah.
about risk management, and it was about, understanding what's the worst that could happen, and if you're okay with that, then go for it,
Yeah.
and so I
Yeah.
think that's great to keep that in context because it feels catastrophic. And if it actually is catastrophic, maybe you won't do it because it's too high risk. But there
Yeah.
are things that I think sometimes we blow out of proportion.
Yeah.
Um, All right, one question I have before I keep turning it over to the scholars, just to make sure I check my box here, which is I like to create a list of all of the recommended books and podcasts that all of the sub-industry spotlight interviews are reading or listening to. So what do you have that you would recommend to Goldie scholars and alumni?
Yeah. My favorite podcast that I listen to religiously, it's not a real estate podcast, but it's called Acquired. I don't know if any of you guys have heard of it, but it's these two guys host it. They do deep dives, like the podcasts are like 3 or 4 hours long
Wow.
on companies and just like their origin story, how they got from, the very first day to where they are today. And it's Coca-Cola, Google, like big, big, typically kind of big publicly traded companies, or at least kind of household name companies that you know. And
Mhm.
it's been cool. It's so cool to just like, I mean, because it just reminds you that like no, nothing is ever linear. Like it's never like cool, it's all going well and great. It just keeps going well. It's always like something catastrophic happens or crazy, or there's a pivot, or you have to pivot or problem solve. And it just reminds me that like part of the journey is just all the bumps in the road. And I just love it. It's my favorite. It's super inspirational. I've learned a ton from it. Um, and it constantly reminds me that like the bumps in the road are part of the journey, and that like you just have to hold on, and it's all good. So that's my favorite. I love it. I highly recommend it.
Awesome. Thank you.
Yeah.
Ellie, I see your hand is raised. Ellie Shield. I saw you off.
Oh, sorry. Yes. Thank you so much, Tina, for your time and apologies that I missed the first portion of this. So I hope I'm not being redundant. But I really like how this conversation is centering on the barriers to entry. I currently work at a bigger, more established shop with, and like Neva was saying, it's a great opportunity to learn from people more senior to me. But one of my like personal barriers to entry of like eventually going to a smaller shop or doing my own deals is just not wanting to get like bogged down in the boring administrative tasks of that. Like, I like the fact that we have an entire accounting team at my current company. And so I'd love to hear just what your like day to day looks like and how you've been able to balance like doing the fun stuff with the kind of additional tasks that are now on your plate because you work for a smaller shop.
Yeah, no, it's a good question. It's when you have a small shop, especially when you start something, you wear 1,000 different hats. So there's literally no way around it. I when a tenant has an issue on the first couple buildings that we bought, like when a tenant would have an issue with something, they would call me. Like I
Mhm.
would have, Friday, hey, there's a sprinkler leak in our suite. I'm like, oh my, I'm at a birthday party with my son. I'm like, what the f am I supposed to do with this? So, I mean, if you're at a small shop where you're really getting your hands dirty, there's no way around it. Some people love it and some people don't. If you're the type of person that wants to stay like siloed in like finding deals or underwriting or asset management or whatever it is, stay at a big company because if it's, depending on the size of it, like sometimes there's just no way around it. I always treat it as just another learning opportunity. And I'm like, oh, I never thought about what to do when like there's a sprinkler or there's a lake in the sprinkler. Like I don't now I know how to fix that problem. So it's really about kind of what your ultimate end goal is. Because there's lots of folks that stay at bigger firms that are more institutional, that everybody has a role, and that's awesome. There's absolutely nothing wrong with that. I love that setup. But yeah, if you want to be at a smaller shop where you're really getting your hands dirty, it's just a completely different experience and a different just learning experience, I would say generally. So it's really up to you, like whatever you end up wanting. But yeah, there's no way when you're starting up, especially, there's no way around the unglamorous stuff. Like, there's no way around it. It's just what it is.
Yeah. Hopefully
Thank you.
there's a medium place maybe on your way to a small
Yes,
shop, Ellie.
yes, yes, for
It
sure.
does remind me of, Goldie starting her own company in the 90s, Goldie B. Wolf and Co. And,
Hmm.
but people were like, what was it like? What was hard about it? And she's like, HR. Like, I don't care about like
Yeah.
what
Yeah.
your free time is doing. She's like, I want to make deals. So,
Yeah.
um,
Totally. So
uh,
true.
Kira, I'm going to go to you next, but I do want to just remind everybody if you have any questions, we have about 10 minutes, 9, 10 minutes. So, I'd love to hear your questions. Kira, you have your hand raised.
Yes, I kind of have two questions. I acknowledge that we only have 10 minutes, so you can answer one or the other or both. So I'm wondering, of all the changes that you're seeing in the global economy right now, which do you feel are going to maybe have the biggest impact on the industrial real estate? And then my second question is a more personal one. You mentioned how you come from humble beginnings, don't necessarily have like a safety net from your family to fall back on. I'm wondering what's one piece of advice about building wealth that you wish someone had given you earlier in your career, now that you are very established?
Oh my God, that's a wonderful question too. Yes. Wait, sorry, I have not had enough coffee today. What was your first question? I
The
literally
first
forgot.
one was of all
Sorry.
the changes
Oh, the
happening.
global economy. Okay,
Yeah.
yes, yes, yes. Industrial. Okay, so I would say just like AI and automation. Just I think companies are going to become more efficient. So maybe that means that their manufacturing processes are going to get more advanced, and they'll need a smaller footprint or a bigger footprint. I don't think anybody knows what's going to happen with regard to industrial real estate. I will tell you that the onshoring is real. There are companies that want to take, especially as advanced manufacturing becomes more and more just prevalent. And a lot of companies are investing in automation in their supply chain and in kind of advanced manufacturing. I think more processes are going to come back home to the United States. I don't think that means more jobs, unfortunately. Like Trump's always like, oh, more jobs. I don't think that's going to happen, unfortunately. But I think the demand for industrial is only going to become greater because of that, and because of I think the desire for supply chain to be more North America oriented. So I think industrial is actually going to be a winner with all this everything that's going on. And then on the money side, invest your money in the S&P 500 index. Just like literally buy a share of the S&P, invest. Um, Even if you have $20,000, go to a private wealth manager, somebody that you trust, someone to help you invest your money. I literally used to hoard cash. Like I would get my bonus and hoard it in a savings account. Like when I was, much, much younger and making no money on that money. The only way to build wealth really is to invest your money. So I would say don't be shy about talking to wealth managers, figuring out how to invest your money appropriately. That no matter how little you have, just get oriented with it and do it.
Love it. Uh,
Thank you.
Maybe noting that one down myself.
Yeah.
Other questions. I I kind of want to pick on Roxanne. I see you here. I don't know if you're on the road though, Roxanne, because Roxanne is has her own development company in Peoria, Illinois. So I know she's
Oh,
always
amazing. Amazing.
sourcing
I'm
her own
curious,
deals.
what does she build? Do we know? She might be in transit, maybe.
I know she probably is in transit, but it reminds me of when we interviewed Roxanne for the Goldies Initiative. She interviewed from her
Hi, sorry
car.
I couldn't unmute myself fast enough.
It's okay, Roxanne. Sorry to pick on you and make you unmute.
I love to be picked on.
So tell me, do you have any questions or thoughts about deal making down in Peoria? What are you working on right now?
Well, it's cool to hear you talk about the entrepreneurship, like the struggles of it and the triumphs of it, because I definitely understand where you're coming from with a lot of those things that you said.
Yeah.
Um, I guess my question would be, what about for what about like for the people who are maybe on the other side of it, who are putting together the deals and trying to capture capital? I'm not at the point where I would be like going after like institutional grade capital, like not that large. But
Mhm.
like, what do you look for in like OMs or different like deal presentations? What do you look for in the developer themselves? And maybe this question is maybe helpful to people who maybe want to do something entrepreneurial at some point and want to be putting together those deals.
Yeah, I think when I'm like again we're going out to raise money for something. I mentioned this a little bit earlier, but I think it applies to this too. I always try like I'm always catching up with my friends in different sectors of the industry. So like my friends in multi, my friends in retail, whatever. Because again, like you can look at a deal by itself and you're like, oh, this seems like a good deal. But then I always am like, how does this compare to other things that these investors are looking at? Like, is my deal interesting, or is it compared to different other types of deals that are being money's being raised for? Does this like not look as good? So I try to understand what else is going on so that I have the context for how interesting my investment is really. And because the same thing, especially if you're talking to institutional capital, those guys look at every product type. They know the yields and everything. And so if you're like, oh, I'm building this deal to a 6.75% yield, but something else is being built to a 7.25% or whatever, it just your deal doesn't look as interesting. So I always just try to educate myself on what else is going on in the market. Just so, I mean, if for nothing else, to have the context for what I'm doing, so that I can sell it appropriately. So, I mean, I would say the same thing for you. And if you don't mind my asking, what product, what do you guys build? What product type are you in, or is it a bunch of different stuff?
Yeah, it's kind of it's a bunch of different things. It's really because it's so much smaller. A lot of it is driven by like the tenant or the end user. So like a lot of
Right.
times I get approached by like a business owner who they've outgrown their space or they need a new space for some reason, and then I'll
Yeah.
try to like find them a building and then
Okay.
do the development for it. So it's kind of like a sale lease back
Got it.
essentially.
Cool. Hmm.
So a lot of it's just driven by having a secure, surefire tenant in place type thing.
Yeah. Yeah, I mean that's really valuable these days. Especially, I mean, it depends on the credit of the user, obviously. Is it a company that can pay its bills, that kind of stuff. But any I would say just like assets that are cash flowing right now versus vacant, like are in very high demand. So there could be a partner that, especially if the tenants are strong, there could be a partner that just locks arms with you guys and builds these types of buildings. It definitely is. It sounds like a unique setup. So it sounds interesting. That's cool.
Yeah, if you know any of those, send them my way.
Yeah, right. I know. I will. Yes.
Thanks,
Um,
Tina.
yeah, thanks, Roxanne. Katrina in the comments asks, are there certain sectors or industries that are driving in the industrial space right now?
I would say, yeah. I mean, it's it's all the usual suspects. Nobody really new. So it's the big kind of e-commerce companies. Obviously like Home Depot, Lowe's, like the types of kind of big online retailers. There's a lot of demand right now from third-party logistics companies, 3PLs. Basically like a retailer will hire a 3PL to do their distribution instead of them building out their own distribution network. So there's all different types of 3PLs. I think they took a lot of space during COVID and then they kind of gave it back, but now the demand's back up. So they're taking more space. So lots of 3PLs. Again, I think retooling manufacturing processes. Manufacturing is, I think, probably on the uptick and is going to continue. But yeah, I think everybody is just kind of like they recalibrated after COVID, and it feels like the recalibration is mostly done. So the demand is like more normalized, I would say now, versus like COVID was crazy. Everybody was taking up way too much space, and then everything went really far down, and now it's kind of back up to a normal level, I would say, on the industrial side.
Okay, well, with that, it takes us to 11:30. Tina, thank you so much. You
Of
are,
course.
you answer all my questions and you add such incredible nuggets and takeaways that I think I will definitely take away, but I'm sure everyone here will too. So thank you, and I appreciate it. Thank you everyone for coming.
Awesome. Yeah.
And have a good rest.
Thank you guys. Yeah, thank you guys so much. I just wanted to say, please connect with
Oh
me
yeah.
on LinkedIn. Yeah, and if I can ever be helpful, I'm in Chicago. It seems like a lot of you guys are kind of local to Chicagoland too. So always feel free to reach out. Okay. Thank you guys all for your time. I really appreciate it. Thank you, Kelsey. It's been really fun.
Yeah, awesome. Okay, have a good one, guys. Thank you.
Thanks, guys.